Hey, Jason here. Today's investment analysis video, I'm going to answer the question, should you buy Nouveau Monde? This is a stock analysis for Joe Q. Before I get to that though, I need to let you know you can get this series as a podcast anywhere in the world for free on all major podcasting platforms, Stitcher, Anchor, Spotify, SoundCloud, iTunes, and more. You can get this as part of the I Love Value, or as part of the Value Investing in Your Car podcast, anywhere in the world for free. If you like this video and you like our other content, make sure to check out, or make sure to subscribe and hit the notification bell so you're notified every time we release a new video, and release new videos all the time. Okay, today I'm going to answer the question, should you buy Nouveau Monde? Again, hopefully I'm pronouncing that right. It's a French word, and I'm not French. So hopefully I'm pronouncing that right. Stock ticker NMGRF. This analysis is for Joe Q. Before I get to that, I have a disclaimer that I always have to get to. I apologize for that. And I have to tell you what the ADR means. This is an ADR. I have to tell you, go through all that stuff as well. So first, the lovely disclaimer that I don't want to do, but every time I forget to do it, I get nasty comments. So this is for informational purposes only, to help you become a better investor faster. I do not short stocks ever, and I do not own stocks long in a long position about any stocks that I talk about in these videos. This is purely to 100% help you become a better investor faster by showing you my visual preliminary analysis checklist, which is, again, I have an actual checklist written out for this. This is the visual part to help you learn how to figure out information fast on a stock so you can discard crap companies faster, so you spend more time evaluating great companies. Why should you listen to anything I have to say? In the first 9 years of my career, I've produced average investment returns of 23.5% per year. That's right behind the 42.2% Warren Buffett produced in the first 9 years of his career, and my returns legitimately make me one of the best stock pickers in the world over the last 9 years. I'm not saying that to brag. I'm just saying, showing that, or telling you this to illustrate that I actually know what I'm talking about a little bit. Okay, that out of the way, we have not a disclaimer, more information today than I normally give. Normally just dive right into the analysis here. I have to give you some information though. So this is a 5-letter stock ticker, NMGRF, for a U.S. or non-U.S. based company. If the stock ticker ends in an F, it means it's the foreign listed stock. So again, I'm assuming this is a French company, so I'm assuming this is listed on the French stock market. We're going to find that out in a second when we go to the analysis. That means typically that there's less liquidity in the stock, sometimes less information, but always higher transaction fees. So for my brokerage, I use First Trade. I've looked at others, Ameritrade, Fidelity, Interactive Brokers, and I'll probably switch to Interactive Brokers at some point. Transaction fees for stock tickers that end in F, that are 5 letters, that are foreign listed companies. Again, foreign listed companies, stock ticker ends in F. For First Trade, it's a $75 per transaction fee versus I think a $6.99 per transaction fee for First Trade. Again, this depends on the brokerage, but there is a higher transaction fee. If it's a 5-letter stock ticker and it's a foreign listed company and the stock ticker ends in Y, so if this was MNGRY, for example, that is the foreign stock listing its shares on the over-the-counter market in the United States. It's traded just like a U.S. stock, although, of course, because it's posted on and trading on the OTC markets, typically means, again, lower liquidity, potentially less information, all this kind of stuff. I'm smiling because I love ADR stocks. These are some ADR and OTC stocks are two of my favorite things to look at. However, yes, that context is important based on where you want to buy the stock. In France, again, we'll find out if it's in France specifically or in the U.S. Transaction fees are lower if you buy the Y-listed ADR stock. You have a little bit more protections as a U.S. citizen than if you buy the foreign-listed stock. There are some differences, but those are the main ones. The bigger thing, though, is OTC and ADR stocks. I love them. I love them, love them. OTC and ADR stocks, let me explain what those are now. OTC stands for over-the-counter market. That is typically, it's also called pink sheets. These are most of the time, tiny companies. I say most of the time because world giant Nestle is listed on the OTC market in the United States. Because it didn't. Why do companies do this? Because foreign listed companies, again, let's take Nestle, they don't want to do a full IPO on the US stock market since they're already listed in the foreign stock market. So to get them access, or to get investors access to their shares though in the United States market, which is the biggest, I think still to this day, by far the biggest stock market in the world with the most interaction and trades and buys and sells and all that stuff. They want to get their shares listed in the United States without doing another IPO and going through that incredibly expensive, incredibly time-consuming process. So they list their stock. They take like a bulk of their shares, let's say 100 shares, for example. And again, that's more than 100 shares, but let's just keep the numbers even. They take 100 shares, for example. They sell that to somebody, an investment bank like Morgan Stanley, Goldman Sachs, or Chase, or whatever. They sell some of those shares to the bank, and then they break them up, and they sell those on the OTC market so Americans can buy them. Okay, so that's OTC. We've covered pink sheets. We've covered Y ending ADRs, F ending ADRs. Haven't even got to the analysis yet. Again, we're getting there. I apologize, but you need this context to understand what's going on, because there are nuances here that are important. ADR, again, this stands for American Depository Receipt. These are the foreign listed shares that are listed in the stock market in the United States, again, under the F or Y ending ADRs. Companies do this because they want to access the US market and blah, 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 all the stuff I just talked about. I love these stocks, love OTC stocks, love ADR stocks. However, unless you know what you're doing, you need to stay away from these stocks, because 99% of the OTC and ADR stocks are terrible. 99% of them. And again, I love this area. This is my favorite area. These are my favorite kind of companies to look at. Again, I think the market cap on this was like 600, 700 million. I love anything smaller the better. But again, unless you know what you're doing, do not invest in these small stocks, because you will get burned at some point. May not be now, but it will happen at some point, because 99% of the companies listed on the OTC and ADR markets are terrible. So again, I want to make this 100% clear. If you don't know what you're doing, stay away from these stocks. Again, even though I love them. So with all of that out of the way, I apologize for that, but it's all super important stuff. Let's get to the actual analysis. Okay, get that out of the way. $641 million company. No PE here, no price of sales. My guess would be no PE, they're unprofitable. No sales, that's more interesting. Are they a development stage company? I don't know anything about this stock. This was recommended by, what was the name? Joe Q, again on YouTube. I don't know anything about this stock. Nouveau Monde Graphite is a mineral exploration company. The company's only operating segment is the acquisition, exploration, and evaluation of mining properties, and all of its activities are conducted in Quebec, Canada. Okay, Quebec, Canada, for those who don't live in North America, is a French-speaking Canadian province. Hopefully I said that right. So that makes sense to why it's a French name. Has properties, blah, 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 blah. Okay. So, again, nothing of interest here. So there are, so that's why they don't have any revenue, or they don't have a price sales because they don't have any revenue. So this is an extremely tiny company that has an almost $700 market cap with no revenue. It's still losing money on operating profits because it has some costs. Same thing on net income. Same thing across the board. Losing money. Has no revenue. And its diluted share counters or shareholders enormously, from 2 million shares in 2011 to 262 million in the trailing 12-month period. So just to stay alive, this company's issued an enormous amount of shares, which has most likely created their share price over time, which we are about to find out as soon as this comes up. And it has not created their share price because their stock has skyrocketed from last September 30th from about 17 cents a share to $1.70 per share. Why? Okay, there's some news. Aha, so EVs. Do they find the materials and minerals necessary for EVs? This is all interesting news, which is why I'm not talking much, because frankly this is fascinating to me of why this 17-cent stock has skyrocketed to $170 or $1.70 a share. On minimal news so far. Financing deal, not what I'm looking for. I'm looking for some major news back in September 2020 about why this would have skyrocketed the stock. So that's an all-electric fleet in November. That doesn't... And again, this is the exact process I would go through anytime I'm going up against a stock. Okay. Batteries. Significant milestone. Okay. Okay, so they're building stuff related to EVs. EVs. Electric fleet for this mining operations. So lithium-ion batteries, okay, that's EVs again. Here we go. Okay, so this is why, or likely why, its stock skyrocketed. Nouveau Monde, again, hopefully I'm pronouncing that right, announces a significant milestone to commercialize its value-added and sustainable battery-grade anode graphite material. The reason this is important, again, because I've researched the EV space quite a bit, is that there's limited supply of the materials needed for specifically many of the batteries. They're going to EVs, so anything related to that and any kind of breakthroughs, quote unquote, even if they're not major breakthroughs, is stuff in this arena is skyrocketing because of that, because of how fast the innovation is going. So, because of that, I also know that the companies like to be insanely overvalued, not just because it's unprofitable, but because this entire industry is unprofitable or is insanely overvalued right now. So this is dollars, US dollars. I think US dollars, doesn't say. So they have, again, even their balance sheet is fine, but it doesn't really talk much. It doesn't really show anything hugely positive. They have $4 million in cash and cash equivalents. Oops, we're not on the quarterly numbers. $7 million in cash and cash equivalents. $40 million in net mineral property interests and exploration assets. And that's just the book value. That doesn't mean the real world value. Okay, so their balance sheet, while clean, is not impressive for a $600 million company with no revenue. Because of that, their valuation is absurd. Most of these aren't even showing up because it's unprofitable and it doesn't have any revenue. So go back over here. Okay, do more on graphite. Mineable assets. Okay, so this isn't just a large mine that is required for, or that includes a lot of minerals required for the building of EV batteries. This is quote unquote the largest, what is set to become the Western world's largest graphite mine. Okay, interesting. $120.3 metric tons. Okay. Okay, so this is a completely speculative company. They don't have any revenues. They're losing money, although not much money. When is the mine set to open? Not. If you're watching on the video, it's certainly not 8 a.m. to 4:30 p.m. That's not what I meant to put in here for Google. Mine set to open. Green light. Produce up 100,000 tons of high-grade graphite per year. What is the date to open? Usually these things take years to open, so if it hasn't already kind of begun that, then okay. Commercial production is expected to align with growing demands of battery manufacturers and will begin in 2023. So this is a completely speculative investment. Not only do they not have revenue in the past or right now, they won't have any revenue, if these estimates are correct, till at least 2023. So, and again, I used to own mining companies. I don't anymore. I used to own mining companies, and especially in Canada, there are a lot of rules and regulations when it comes to mining companies, and things usually end up taking longer. So I would say at earliest 2023. I would say more realistically, again, I don't know the inner workings of this company or the negotiations it's had with Canadian officials, but I would guess 2024, 2025. Could this company become insanely valuable due to its mineable assets and graphite and stuff used in, and minerals used in EVs and EV batteries? Yes. But this, to me, again, it's completely speculative. They don't have any revenue at all. You can't you can't evaluate them on that. They're losing money to kind of stay around and work with the government for these assets. But again, at earliest, this is still 2023 until they're producing revenue. For me, I can't invest in this kind of stuff. Because again, at this case, it's 100% pure speculation. To me, and let me bring my face back here. We're back. There we go. To me, this isn't even like, this is like playing the lottery. Except, I used to just kind of leave it there when I explain this to people. This is like playing the lottery. It might work out. High likelihood it won't work out. Even if it does work out, you're probably not going to make that much money. To put this into better context, after talking with a colleague about this is like playing the lottery. Let's say putting 10,000, 20,000, 100,000, whatever you're going to invest into it. Playing the lottery with that amount of money. Again, there's a high probability this won't work out. If it does work out, you're probably not going to make that much money. There's a small percentage chance you're going to make a ton of money. Again, I used to invest in mining companies. I don't anymore because of the highly speculative, future-based nature and highly uncertain government regulations and environmental regulations. And in Canada, a lot of Native American issues about drilling and all that on Native American land and mining on Native American land. There's too much uncertainty for me, which is why I got into investing in miners years ago. This is even more speculative because, again, they're not earning revenue now. They haven't in the past. And they, at earliest, will earn revenue in 2023. Could this company become insanely valuable? Yes, because of their mineable assets and graphite. Again, they could become insanely valuable. The way I look at this, or the way that most speculative mining companies work, is 2 out of 10, pretty good. They're okay investments. Not great, not terrible. They're okay investments. 1 out of 10, spectacular. 7 or 8 out of 10, blow up. This, again, when I say blow up, I don't mean necessarily go away. I mean, this company might be bought out. Its debt might be bought out. There might be some kind of merger. I don't know. But they don't end up lasting to make a lot of money or even a little bit of money. There's, again, regulations and delays and all that. This is 100% a speculative investment. Again, there's I wish I could analyze it for you, Joe Q. I appreciate this. This is an awesome case study, frankly. But there's not much I can analyze because it's such a speculative investment. Again, there's nothing even to really comment on the numbers when it comes to the numbers, which on the visual preliminary analysis, which is what we're doing here, that's pretty much what I comment on. I did a little bit more here in digging and try to figure out why it's gone up so much. Because the EV stuff, because their grants or the authorization from the Canadian government, all that stuff, which is good. But again, 2023, that's still at least 2 years out, depending on the time frame. And again, with my previous experience in miners and why I got out of mining, investing in mining companies, there's often delays. There's regulations with the government. There's regulations and legal stuff with the Native American tribes. There's weather issues. There's all sorts of issues. And this, again, is a highly speculative investment that I wouldn't invest in. For you, it might work for you. For me, as a long-term investor who's mainly looking for companies that produce cash flow and profits and have solid balance sheets now, not in the future, I don't invest in these kind of companies. For you, you might have different risk profiles and stuff like that. But just because it has a foot in the EV space in terms of the batteries, which is the main sticking point for most EV companies, is the batteries at this point. This is why its stock skyrocketed, 10x since September. Again, I don't play the short-term game. I don't play the trading game. I'm a long-term investor who wants to buy and hold essentially forever if I can. I don't get involved with this kind of stuff. Again, I used to. I don't anymore. And for the reasons I've outlined here, and I can't recommend this company. And frankly, again, I can't even analyze the numbers like I usually do because there's nothing to go on. No revenue, past, present, and into the future, at least until 2023. So, and which means, again, they're losing a little bit of money. They're not losing a ton of money, but there's nothing to really evaluate. So, in terms of the numbers, at least. I hope you learned something here, though. I hope you learned some interesting information at the very least in terms of the ADR OTC stuff, in terms of this business model, what it's doing or what it's trying to do. I hope you learned some stuff. If I missed something, if I didn't explain something well enough, let me know in the comments below. If you want me to evaluate stock like this for you, let me know in the comments below. Again, this was for Joe Q. Again, appreciate it, Joe Q. Even though the numbers, there wasn't much to go on, this was still an awesome case study. I found it entertaining. I find learning stuff like this and look at different companies entertaining. So hopefully you guys did too. And Joe Q, hopefully you appreciate it. If you want me to look at a stock for you, let me know in the comments below. At this point, every single stock I'm going to evaluate from now going to about the next month at least is for somebody who asked me to evaluate a stock on YouTube. So if you want me to look at a stock, let me know. I'll look at any kind of stock anywhere in the world except for banking companies because I don't evaluate banks. I should probably throw speculative mining on stocks on this, but again, this was a good case study. What is the other one? Banks, because I don't evaluate them, and insurance companies, because you actually have to dig into the annual reports to evaluate them. Other than that, I'll evaluate any stock in the world for you and let you know my thoughts on it as a potential investment. If you're looking to become a better investor faster, make sure to check out our free resources below. 5 free gifts where you can get sorry, I'm spacing right now, where you can get access to our 5 free gifts, including the full written preliminary analysis checklist, which we're going through the visual part of it right now. You can get that at the link below for free. You can also get a PDF copy of my book, How to Value Invest, and a free PDF copy of our guide, 7 Tips to Picking Great Stocks and 3 Times You Must Sell. You can get all 3 of those for free at the links below. If you're wanting more specific help from me to learn how to become a better investor faster, make sure to check out the link to our masterclass below this. If you're listening on the podcast or YouTube, we really appreciate it. Like, love, share, subscribe, all that good stuff. And if you're watching on YouTube, make sure to hit the notification bell so you're notified every time we release a new video, and we release new videos all the time. If you're listening on the podcast, we also really appreciate a review, because the more reviews, views, and listens we get to our content, the more people we can help. Again, I hope this was helpful. Not really much to analyze here. Still interesting. Hope you learned something. Hope you found it entertaining. But until next time, have a great day. Talk soon.